Hey guys, we're here with the team from MakerDao, Circle, and Centrifuge, who will be doing a talk around mirroring real-world assets to blockchain. As usual, can you confirm that you can hear us in the Ask a Question thing at the bottom? And for the speakers, do you mind just introducing yourself and they can confirm if they can hear you?
Yeah. Can you hear you? Yes, guys.
And apologies, the chat is broken. We have contacted Crowdcast. They will hopefully get it fixed before sometime soon.
Okay, just to make sure that the chat can hear us before we kick it off.
Yeah. Oh, they said the chat works.
Okay, they can hear us. Okay, perfect. Then today we're gonna have a panel. We're gonna talk about marrying the real world assets to the blockchain in a few different forms. So first off, my name is Gustav. I'm doing the European business development for MakerDao. We're one of the larger DeFi projects in the space. And then with me today, I have Leah and Joao. Leah from Centrifuge and Joao from Circle. So I figured that maybe if you guys, you can just spend like a minute just like introducing yourself and then also just quickly run over like what your company does and what you guys are doing for them, just so we can get like a quick introduction before we kick it off. Leah,
Sure.
if you want to start.
Cool, sure. Okay, so I'm Leah. I'm responsible for partnerships at Centrifuge. And Centrifuge, we are building a protocol for an open, decentralized financial supply chain. So our founding team actually comes from the space of supplier financing, so meaning advancing early financing to businesses that just delivered a product or a service. So instead of them having to wait for 2 to 3 to 4 to 5 months to actually get paid, businesses oftentimes take out loans and to be able to pay their staff, to be able to pay taxes, etc. And so we're coming from this traditional industry space, sort of, but like the businesses that operate there today only really scratch the surface of the financial need that is there, and this is exactly where Centrifuge comes in. So we're building this open protocol to enable businesses to access finance in DeFi. So our stack consists of our peer-to-peer messaging protocol that allows companies to exchange financial documents in a safe and secure way. Then on top of, as the next layer, we have our Centrifuge chain that holds the unalterable single source of truth for these documents. And then on top of this chain, top of the Centrifuge chain, we have dApps that interact with the DeFi ecosystem. And one of our dApps that is built on top is TinLake, a securitization platform that allows these tokenized assets to be used as collateral in DeFi.
So this is really
very short.
Yeah, from your guys' perspective, this is really, like you're taking the real world assets and you're like really pushing it into like the applications on the blockchain, right? So you guys are very dependent on them. I could imagine like the applications on the blockchain as well, right? Like what you actually can do with the assets. So Joao, both you and Leah, you work with like a little bit different assets, I would say. So maybe you can give a little bit of intro to what you do at Circle and how you guys are tackling these like real world assets on the blockchain.
Sure. My name is Joao Reginato. Thanks for having me, everyone. I had product for Circle. Circle has been around in the crypto industry for the best part of 6 years. What we have at the moment, what we work on at the moment is we have a platform where internet businesses can basically run their business banking or their commerce or their financial requirements on top of our infrastructure. It's a set of APIs combined with what we call a business account, and they can implement commerce. They can sell their products and services through our APIs. They can accept both more traditional payment methods around the world, but also payments in stable coins. And I'll talk a little bit about that. They can also make payments to their suppliers. They can basically automate all of their business banking on top of this new infrastructure that is powered by stable coins. So it's powered by digital dollars, and that's the real world asset that we have brought
blockchain via our solution, which is US dollar coin USDC, which is the stable coin that I helped build about 2 years ago and bring to the market, and eventually became part of this consortium called Center, which Coinbase is part of as well. And we should see in the future other companies joining the consortium, but it's basically a fully collateralized fiat stablecoin that attempts exactly to bring dollars to the blockchain, so that businesses around the world and a lot of businesses have the need for both doing their business banking or processing financial transactions, paying their supply chain, but also doing commerce, accepting payments from their consumers, and maybe operating marketplaces. There's a ton of different use cases that we have a platform for facilitating now.
Cool. So I mean, this is not a panel where we have to talk too much about the current situation, the Corona situation that is around us. But I still feel like we kind of have to touch it a little bit. I think both of you guys have had some pretty cool experiences about what has been happening in the last couple of months. So I think from this one, I actually would like to kind of get a first-hand kind of chat with you about what has actually happened for you guys. So Leah, we saw that you have submitted 2 proposals to be added part of the Maker collateral pool. Maybe you can tell us a little bit about what has been happening with you guys on your front here during Corona.
Okay, yeah, sure. So for us, actually, the March 12th Black Swan event on MakerDao actually really intensified or accelerated that whole discussion around diversifying the collateral portfolio on the Maker system, but then also the entire DeFi ecosystem. So for us, we have been really heads down busy getting the proposals out that we submitted last week. So this is actually, we foresee or what we really want to do is setting the infrastructure, setting the rails to bring those real world assets, as you call them, into as collateral onto MCD. And we work with 2 different asset originators together. So one of them is one of them is called Paperchain. They finance music streaming music streaming invoices. So their counterparties are Spotify, for example, and then they pay out to independent artists or music labels, for example. And then another one is a company called Console Freight that advances financing in the freight forwarding industry. So we're using freight forwarding invoices here. And for us, it was really important, or really a wake-up call that, okay, now it's actually the time to make a move and to make a move to bring these assets on chain, to be able to have assets in that ecosystem that is directly uncorrelated to ETH, so that can actually prevent things from happening, such as okay, the price of ETH drops and then a bunch of, or a large number of Maker vaults get liquidated. The Ethereum network is so clogged that actually a lot of people lose their collateral. So
so you feel like it has kind of been a realization for the community and also for you guys that these things need to move a little bit faster, maybe?
I think if not now, then when? So I think this was really a wake-up call, and we're really working full steam on bringing that out in a secure and safe way. And then also on the other hand, what we've seen is that some of our asset originators are also reporting to us that, okay, now capital also becomes quite tight. So to be able to actually service their customers or their stakeholders in their individual networks, DeFi could actually also play an important role there to actually bring liquidity into their networks fast and in a fast way.
So overall, I can feel like you guys, you had to put up the speed a little bit. So I think also because I think this is, I mean, for us at Maker, we of course, there has been, a little bit of some hard times, I would call them. But I think you guys, you're at least like two companies that I believe have had like a pretty positive uptake here during the coronavirus. Joao, if we take a look at USDC as well, I mean, I believe that the market cap has gone up from around $400 million to $700 million now. And so now the markets, of course, have started jumping back a little bit again. But I think we really saw like a huge, demand for stable coins, both DAI and USDC, and we also saw DAI getting added to the Maker protocol as part of the collateral pool. So maybe if you can just talk a little bit about like how this whole experience has been for you guys at Circle, as well as maybe tying a few words like what do you think about something like USDC getting added, for example, to a protocol like Maker?
Yeah, the last number of weeks obviously have been, I don't even know the word to describe, have been very challenging for all of us around the world. But for us who have been working on the Circle platform and specifically with USDC, it has been a couple of very interesting weeks, or a few very interesting weeks, because we have experimented tremendous growth. So USDC was hovering at around $500 million in market cap at the beginning of the year, but at around the date of the event that you guys are referring to on March 12th, it was a little bit lower at around 450. Since the crash happened, we have seen tremendous interest for USDC, for just holding on to digital dollars, to the extent that I think we added $350 million in market cap in just a number of weeks. And so what we noticed, what was happening, right? The growth was tremendous, and I don't think we expected that in that speed. But what we noticed was just in general a flight for safety around the world. So we were seeing demand from all of these countries, from all of these platforms. From it was really completely widespread. It didn't come from a single place. It didn't come from a single use case. And also on the platform that we had just launched, at that point, we launched our platform and opened up for businesses to start signing up for our APIs and accounts really on that week. And we saw a significant spike in interest. So
pretty good timing. Maybe.
Well, it was pretty good timing, yeah. The two things that we observed was a flight to safety in general, right? So we saw a demand for USDC and for holding on to USDC in general. But we also saw a spike in demand for an increase in digital commerce, right? Which I think a lot of other companies in more traditional parts of the industry have witnessed as well. Everything that had to do, obviously, with bricks and mortar was faltering, and then people needed to jump into figuring out how to run their businesses online, and that's one of the things that we can deliver in a differentiated way this way with more open protocol and blockchain based solutions, is that we don't have the same high barrier for entry, for example, that's out there for business banking or for payments processing or for digital wallet management, because we don't require that these companies have basically a banking relationship, right? They can join and simply hold on to their assets and their customer assets on the blockchain. And then we saw Maker adopting USDC as part of the protocol, and that was a really interesting collaboration. And we have been in touch with you guys for a long time. I think we all collaborate well in this industry, but it was nice to see the community really getting together in a matter of hours to get things done.
Yeah, I mean, also for us, this was also something to people who's not doesn't know what happened. That basically Maker, the protocol that the foundation I work for is building. We previously only had Ethereum and BAT, which is two crypto native assets in the collateral pool. But during these events, USDC got added through like a pretty big push from the community, and that was actually the first time we had like a real world asset in the protocol. So for us, it at least like was also kind of like a milestone, where I think like some of the frameworks that Leah also mentioned earlier has kind of like been pushing towards this as well. So picking up on that thought, I mean, one of the reasons why this was a little bit delayed, some people might have said, but why we didn't have these real world assets in the collateral pool before is because I think in a lot of these protocols, especially the ones that has been seen very pure historically, working like exclusively with Ethereum or something, there's been a little bit of like ideology clash between the very hardcore Ethereum community who only think Ethereum should be used as a collateral, and we've also seen a lot of alternative designs to something like Maker being proposed where Ethereum would be the only collateral. When you guys go out with this kind of like decentralized assets, because you are in both of your own respective ways, like an asset originator, right? That takes these assets and originate them on the blockchain. So how do you guys deal with this like ideology clash that you might face, if you even face some of it? I know that you guys, Leah, have faced a little bit of it at least, and I wonder if you guys at Circle has too. So maybe Leah, you can start off. Like, how do you deal with this thing that you suddenly have an asset which is not 100% trustless, which you have to place some kind of like trust or value or something in kind of like other than just what is code?
Yes, of course, and I think it's also a very valid debate that is happening around there. I guess how we counter that, or how we respond to that, is really full transparency. So everything, or like the way we built our protocol is really that you can see everything that's happening, you can see on chain. So it's not a black box of some asset originator that just securitizes a bunch of assets and then just pushes them into DeFi. Really, everything, the risk parameters and everything is really accessible on chain. And also you are, so the way Timnec works is you submit these non-fungible, non-crypto native assets such as invoices. They get pooled, and then ERC20 tokens are minted on top of that, and so that they are able to then communicate with lending protocols such as Maker, for example. There are different pools deployed for individual assets, and at any given point in time, you are able to see how much debt is in these pools, how many transactions are being processed, etc. So this is one way for us to respond to that. Okay, so we have full transparency. On the other hand, maybe we cannot really claim that our assets are fully decentralized, but we are trying to decouple these processes as much as possible. So it is a very modular setup. You can, we have certain permissioned access functions to the underlying data. So third parties can come into that process and give independent assessments of these underlying collateral. So I would say decoupling and full transparency.
Okay, so maybe building a little bit of compliance into the protocol that you didn't enforce on chain with the assets. So like, even though the assets isn't completely trustless, then you try to make the process more transparent than traditionally, I assume, right?
Correct.
Perfect. Okay, and then for you, Joao, I think historically we've seen a lot of the centralized stablecoins being used mostly for trading, where I think that this like ideology clash, if you guys have even felt that, might not have been that big of an issue. But now I have noticed, and I think we have seen like pretty clear that the USDC is starting to take a much more use case focused approach, a little bit similar to some of the stuff that we do at Maker with DAI, where we really believe that putting it into the hands of the people that actually use it and need it is very important for us. So how have you guys been dealing with this? I wouldn't call it like a very big transition, but maybe you've had like some ideas around there, and like how have you guys approached it? All of a sudden trying to really put a larger focus on interacting with the Ethereum community.
Yeah, that's a great question, and it's not an easy. I don't have an easy answer. We don't have an easy solution for that. What I can say is the way we approach the space is, let's really focus on what customers need. And since the beginning, we have always been very pragmatic and looking to deliver value as fast as we could. Right? There's a long journey in this space and this technology. There's a lot of questions that still need to be answered, but at the same time, we want to start bringing blockchain and crypto technologies to mainstream as fast as possible. We think that's very important, and we're always very keen on listening to our customers and delivering on what they need. And if we are focused on businesses, as I said, we are, and in really bringing platforms and infrastructure so that they can build their businesses on top of, and build commerce and build financial services on top of. Sometimes the end user of some of our customers, they don't really know that they are touching a crypto-based asset or a blockchain infrastructure, and in those cases, then that's not so much of a concern. Really, what we're interested in is how can we allow digital dollars to be used as part of the tech stack that these businesses need to use. Obviously, USDC has a very important role to play in that. And somebody was asking a question. I can see who's flying to US dollars, right? Basically, everybody in the world who don't have access to a US dollar account, right? And that's a lot of people. That's basically the vast majority of people. So stable coins like DAI and USDC, when they can represent the value of digital dollars for people, and they can hold that and be the owner of that, that's very powerful. But there's not a significant amount of people that can actually question the underlying technology and the pros and cons for that, excuse me, and people have to be educated. There's a significant amount of actors in the ecosystem that have to be educated. But fundamentally, we try to deliver as much value for our customers given what they need now, and we try to do the right thing as much as we can. There's a fiat collateralized stablecoin is always going to be centralized by definition due to the solution. There's nothing you can do there. When we designed USDC, we said, okay, there's nothing we can solve there, but let's try, as Leah said, let's see what we can do around that to make the solution as palatable as possible. And it really comes down to transparency. And so creating the center consortium. So I know it's hard to educate people and understand, but USDC is not something that belongs to Circle. USDC is a technical standard that actually is owned by this external consortium. Circle is only one issuer of USDC, one of the members of the Center Consortium. Coinbase is a second one. We'll see many others in the future. There's a lot of transparency on that consortium, and we think that doing these things is the right thing to do to at least minimize a little bit of counterparty risk to a solution that's centralized like ours.
Okay, yeah, I mean, I think that makes sense, and I mean, it seems so far that you guys have had pretty great success with it. We have to give you that, right? So it seems like something is working. So I just want to let the listeners know that we'll be taking some questions. So I have one last thing I want my two great panelists to answer here. But if you guys want to ask some questions to them, then feel free to shoot them. Then we'll go through them in a little bit. So guys, since this panel here is kind of like called like marrying the real world assets to the blockchain, how I interpret that is, you take a real world asset and you do something with it on the blockchain, right? In my head, this is an application or some use case that you're doing with it. So, let's start off with you, Leah. What is your perfect marriage? What you take some kind of real world asset and you put it into doing something on the blockchain. What is the best marriage you see there?
I mean, I'm probably obviously biased, so
you have to be, right?
I have to be. I mean, I have also been working on it for quite some time now. So for me, really, the perfect use case would be to enable. I have been mentioning this earlier, where our founders are coming from, and the services that are already out there for financing or like providing finance to businesses. Those services mostly only really reach top, like the tier 1 or tier 2 of a financial supply chain. And as I think many of you know, a supply chain can go up to even 40 tiers. And so actually the smaller companies that are in there, they don't really benefit from these services because they're too small to actually be economically interesting for banks to take them on or other non-bank lenders. So for me, a perfect use case would be that those asset originators, that the perfect marriage here would be that those asset originators that have a strong business, that have great counterparties, that have great assets, are actually to be able to access this financing in the first place. So, I mean, for me, ideally, they would come just without another third party come in and just directly lend from decentralized lending protocol that is out there, such as Maker, for example, and just really cut out the banks.
Yeah. Okay. And what about you, Joao? What is your perfect use case?
I'll try to be quick, but I think the things that create the perfect marriage, if you will, for us are three things. One is the benefit that solutions like USDC can deliver for businesses, in the sense that they now have access to a digital version of the dollar that's has much quicker settlement times. It's much cheaper to move around, and it's global by definition, a lot more similar to how everything else that they tap on that lives on the internet, right? As opposed to everything else in traditional finance, which is far from being those three things: fast, cheap, and global, right?
Yep.
The second one is the value to consumers, is the fact that they now have a version of a real world asset that they otherwise know, but they can, they become a much stronger owner of that asset, and they can bring it over from one system to another, one application to another, just because that's an open and a standard protocol. And and that's it, really. So I think the that, combined with the programmable element of this new type of technology, and the fact that you have a lot of innovation that can be deployed on top of something like a digital programmable dollar, those are the things that we are interested in, and to me create this happy marriage, as you said.
Yeah.
What is your take, Gustav?
Yeah, I was about to add that I think one thing which I think can be taken out from like both the things you're saying here, which is also my personal thing, is that like now all of a sudden we have this system which is unbiased, right? We have the first time in history where finance can be unbiased. It doesn't matter where you're from, or like which country you reside in, or like what your nationality is, or like which percentile of the world's richest you are, right? Most of these systems here, they just generate services based on like what you can give to them, and then based on the rules of the system, right? So for me, that's really what is super appealing here, is that for the first time we really have like global reach with the services that we can build, right? So for example, whether it's Maker or for example Compound, that I know USDC is the biggest asset on, which both are these like decentralized lending protocols. We can actually provide financial services to people globally, with the same rate, with the same risk profile, and everything like that. So I think that is something which is very beautiful with the blockchain.
Hey guys, we should probably take one last question.
I'm gonna pick a question here from the question. Okay, so I think here there's this one. I think we touched about it a little bit, but there's this one. How much interest do you both see in your respective fields that people want to use your services? Like, what is it that makes like the selling points? I know that we talked a little bit about like cheap, fast, and so on. But what is like apart from, I don't know if you have some extra like selling points. I know, Joao, you actually answered this one pretty well. So maybe Leah, you can take this one.
Sure. I mean, like the biggest interest is for those, I touched upon it a little bit earlier, but it is for those companies that are currently not really serviced by traditional solutions. So those that are that have sustainable growth in their business, but maybe are still small, like too small for banks to be financed, to be financed via banks. So there, the interest is really great. I think these would be the main topic, or like main point to add here.
And then I think the last one, Joao, are you scared of Libra?
No, I don't think we can be scared of anything. We just have too much in front of us to keep plowing ahead and to keep growing. We welcome everything that happened this year. I think Facebook brought a lot of attention to crypto and blockchain. It actually forced a few discussions in the US in particular on the regulatory side, which we think are very important. A lot of regulators around the world are coming with proper stances on stablecoins, which I think is going to be tough, but as with every regulation, but I think it also clarifies the space, and it helps you understand, the guardrails and what you can do and what you can't do. So we welcome all of that. Eventually Libra is going to be launched, and I don't think anybody knows yet exactly how that is going to play out, but we're very pragmatic. As I said, we're very open-minded. We want to deliver digital dollars and digital currencies for businesses who want to run commerce and their infrastructure on the internet, and whether that is USDC or who knows what will be there as the de facto standard in 2 years. I think we're going to deliver to customers whatever that is.
Awesome. Okay, and then one last thing. To the people listening in, if you guys have like an app or a dApp or something that you think they should check out, what would that be? Just the name of the project, Leah.
For me, I'm currently like really a fan of DeFi Zap, just like
DeFi Zap?
zapping in just zapping in and out of different pools and earning interest. I think it's really cool and a good starter.
Yeah. And Joao, what about you?
I think so too. I think it's, last year was so exciting for DeFi, but I still think a lot more people have to know what's going on there and how much safety and interesting things they can do with their money. So I would recommend anyone checking out Compound, definitely.
Awesome.
Yeah.
All right, I think that was it for now. Thank you very much, Leah. Thank you very much, Joao. It's been awesome talking with you guys. And if any of you wanna follow these guys afterwards, then you can go in and check Centrifuge out on Twitter as well as Circle.
And give us feedback on our applications in the Maker forum.
Yeah, there you go. USDC passed so fast, we can't give them feedback anymore. All right, thanks a lot, guys.
Thanks.
All right,
Thank you.
thank you guys so much. All right, we're going to transition into the next session now.